Hey, I'm Mike, and the company that I've been researching is Siemens, so let's get into it. First off, let's talk a little bit about what Siemens is all about. They're a global conglomerate with locations in nearly 200 countries and employ over 350,000 people. They specialize in 9 different market segments, which include power and gas, wind power and renewables, energy management, building technologies, mobility, process industries and drives, Healthineers, and financial services. The products Siemens offers range from healthcare, automation, financing, and building technologies, just to name a few. Now for a little bit of history on the company. It was originally founded by Werner von Siemens and Johann Hauske as Telegrafen Bauanstalt von Siemens und Hauske, which translates to Telegraph Construction Company of Siemens and Hauske, and it was founded in October of 1847. As the name implies, telegraph construction was the largest part of their sales for decades after the founding, and in 1855 the company establishes its first foreign agency in St. Petersburg, headed by Werner's brother. Now fast forward to after World War I and II, and the company has lost about 80% of its assets due to production facilities being destroyed and patents being rescinded. And then finally, in 1966, Siemens und Hauske, Siemens Reiniger Werke, and Siemens Schuckerwerke are legally joined to form the Siemens that we know today. And here we're going to look at the industry that Siemens and its competitors are a part of. Now, being that they're all very large conglomerates, every platform that I use to research them seems to refer to them all a little bit differently. So I just classified them all as industrial conglomerates. And in this category, there are the companies of GE, ABB, and Toshiba. Now, GE, you may all be familiar with. It's an American conglomerate that specializes in technology and innovation, but it's also part of other fields such as aviation, transportation, home appliances, and so on. ABB is a Swedish conglomerate that focuses primarily on engineering and robotics. So while they aren't as diversified as the others, they're still a very strong competitor as they're able to focus on a much smaller market segment. And Toshiba is a Japanese conglomerate which focuses primarily on electronics, and that ranges from information technology to electrical components to household appliances and even to medical equipment. And now we're going to take a look at the stock prices of each company. And they're all vastly different from each other, despite the fact that each of them are a powerhouse in their respective category. So Siemens stock, it's quite a bit ahead of everybody else. It's a right around $68 right now, and that was after a 2-for-1 stock split back in March. GE right now is right around $30. And ABB is about 22, and Toshiba is the lowest at $12 per share right now. And now that we've talked about their stock prices, this leads me into their PE ratios, dividends, bonds, and betas. Now, these all tell a little bit of a different story about all of the companies. So Siemens PE ratio is at a 17.59. Its dividend yield is $1.93, or about 2.86%, and its beta is at 1.31. Its bond ratings are an A1 long-term and P1 short-term from Moody's, and A plus long-term and A1 plus short-term from Standard & Poor's. ABB's PE ratio is 25.39, which is a little bit higher than Siemens. Its dividend is 75 cents, or 3.3% yield, and its beta is 1.11. The PE ratio being higher could be due to the lower market value of the stock, where it would require much lower earnings per share in order to meet the same percentage. As for its bond ratings, it scored an A2 in the long term and prime in the short term from Moody's, and an A in the long term and an A1 plus short term from Standard & Poor's. Next up is GE with a PE ratio of 33.59, a dividend of 96 cents or a yield of 3.24%, and a beta of 1.1. Again, the higher PE could be due to the lower stock value. And in both cases, even though the actual dividend payout is lower for both ABB and GE, their percentage is higher due to the same reason, being that they have a lower stock price. So the bond ratings for GE are A1 for the long term and P1 for the short term, rating from Moody's, and a double A minus in the long term, and an A1 plus from Standard & Poor's in the short term. Finally, we have Toshiba with a PE ratio of negative 1.79 and a dividend of 0, as well as a beta of 1.19. With the bond ratings for Toshiba, they come in at a CAA for the long term and an NP for the short term from Moody's, and a triple C rating in the long term and a C in the short term for Standard & Poor's. So now, the one thing that they all have in common with Siemens is that they all have a lower beta across the board. So this could mean that the investors would want a larger return from Siemens, as it's inherently riskier with a higher beta, which in terms of their dividend value, they do receive a much higher dollar value, as well as a much higher stock and growth value. And next, we have the annual report. So let's start out with the officers' compensation. So the chairman of the board and CEO, Joe Kaiser, was compensated 7,428,000 euros between salary, bonuses, and stock options in the last fiscal year. Lisa Davis, one of the members of the board, was compensated 4,443,000 euros in total. Dr. Roland Busch, 3,843,000. Klaus Hemrich, 3,835,000. Janina Krugel, 3,604,000. Dr. Siegfried Russwurm, 3,865,000. And finally, Dr. Ralph Thomas at 3,849,000 euros in total last year. So, briefly mentioned in the report was their most recent merger that did actually come to the fruition this year, and that was the merging of Siemens and Gamesa, which is another leader in the wind power industry. With this acquisition, Siemens has effectively gained market shares in over 90 different countries, has gained $21 billion in backlog, and $11 billion in pro forma revenues. Right. And now, let's take a look at a few analyst statements for Siemens. So first, we'll take a look at the Forward Equity Research. So their recommendation is to buy, as they believe Siemens will outperform in the coming year, whereas GE has a hold recommendation. Reuters also recommends to either buy or hold the stock, and again, they also expect that earnings per share will rise throughout the course of the year. And finally, MarketWatch also recommends to either buy or to hold, as that they believe the earnings per share will rise, as well as the stock price will also rise to right around $70. whereas right now it's holding steady at about 68 or so. Which leads me to a couple things that Siemens has accomplished recently, which could have also impacted these analyst opinions of the value of the company. As one of the leaders in medical engineering and technology, and also due to the amount of workers that it employs in China, where there are serious pollution concerns come the winter and the summer seasons, Siemens has taken up the initiative to attempt to provide cleaner and fresher air to all of its employees. It set up additional air filters and purifiers to help further cleanse the air in all of their buildings. And they've even required that surveys be taken so that they can assess the air quality in each of the buildings. Now, branching off of that notion, they're also working on innovating new ways to make buildings more self-sufficient, such as their headquarters in Munich, where the entire building, from the roof being able to collect rainwater and solar energy, all the way down to the foundation being thermoregulated to where it can heat and cool the building as needed, is being recognized as one of the most efficient structures in the world. And beyond that, they've also been recognized for breaking 2 speed records. So they've developed an electrical engine that's able to put out more than 5 times the power of engines of similar construction, and were able to break the speed record for a completely electric-powered aircraft in both kilometers per hour and in towing a glider into the sky, proving that they're able to still make innovations in every field that they play a part in. Now, moving on. As for foreign exchange risk, there are several factors that could be affecting revenues. Brexit and the impact that it will have on the euro are probably the biggest of concerns, as the euro continues to drop relative to other currencies, making sending capital out and purchasing materials outside of the eurozone seem more expensive. But a hidden benefit to it is that a weaker euro means that bringing money back into Europe will net them a higher earnings, as foreign currencies can now buy more euros. And finally, would I buy this stock? Yeah, I would buy this stock. Between the positive feedback from all the analyst statements, seeing everything that the company has accomplished over its history, how it's grown over its lifetime, I would say that buying stock in Siemens would be a safe bet for anybody.